Those are the ones that we use. So, okay, yeah, we were here at this point. So we measured where the London low is, and the London low is here and the London high, and where the London high is. So once we let the market go through its phase, uh, then we started to notice the New York came in, you see. So as the New York came in, it was in the middle, you see. So it faked out. So many people would have thought that it took out the low, yeah, but it hadn't taken out the low. The low is still valid at this point. And then the price rose. So what did they do? They took out the high first. You see. So this is a textbook trick. So the market will always try and trick you, like in many ways. You have to be very fucking vigilant. So this is a textbook trick. Once they took out the high, they faked the sell. You see that? Because they know that, okay, these guys are gonna try and sell it because they took out the high. You see, so yeah, they took out the high. In essence, I would have also entered. In essence, I would have also entered, but then I would have jumped out as soon as I saw this right here. As soon as I saw these candles here, I would have jumped out because I'm seeing a reversal pattern. You see, so yeah, they could have faked, but then they went more higher. So they went higher to go collect an order block. See, yeah, so most of the time when either one side of liquidity gets taken out, try and deduce if there's an order block somewhere close by, you see, because then inflation can take place in order to rise the price to that specific order block. You see that?
Okay.
So in here, they inflated the price, it got to this order block, and then since it took out the high, now it's in an order block. And when is this situation, when the high gets taken out and the price rushes to an order block, like it's gonna be an instant reaction. See, it's gonna be an instant reaction. So here we got an instant reaction. We got a sell. So this was a beautiful level for entry. See, and then it went out to do what? To finally take out the low. Now it finally took out the low. And you can see that evidently it took out the low because the price went below the low. It has to go below the low. See, and then you see these reactions and then it left. So there was a lot of volatility and liquidity within this market on that day, you know, and that's how NAS happened. So you can see like from the Asian to the London, it's really quiet, you know, it's really quiet. But as soon as it gets to the New York, we have swings and movements, you know, big movements. So that shows that the guys who are in charge have stepped into the game, see, and they're moving the market. So then you can see that this sell came down, took out the low, and then from there we leave the market because, like I said, as soon as it takes out the low or takes out the high, you must just exit because it can turn back and shoot back up, you see. So so it's always best to always close. You see that. And then in this day,
Why is
all
the
the
Asian always this stagnant though?
come again.
Saying why the Asian market always that stagnant though?
Yeah, like I said, because see in the US 100, like I said, it's Nasdaq. So it is controlled by
Oh shit!
entities that are in America. Yeah, they're controlled by entities that are in America. So the money only comes in when the New York market gets opened because that's where most of these companies are at. You see, and that's where these guys that's the controller, the big controller of this market. So for example, if we were dealing with like a currency pair, let's say GBP USD, which is the British pound versus the US dollar, we would get most of our movements during the London session and the American session. You see, because the British are also funding or flooding in money into the market because it's their market, but they will only funnel money into the market um, between the London session, because that's when their market is open, you see. So once it closes, it's the Americans that come in and they're the ones with the money and they will start controlling that pay. You see what I'm saying? So
Yeah.
during the Asian session, it won't move at all. It will just either be stagnant. So there are situations and incidents that happen where either the Asian was selling hard or was buying hard. And that was just due to they were trying to rush the price to a certain point before either one of these markets open. Maybe a price had to be at a certain area before these markets open, you see. But it usually doesn't happen. It's not a normality for there to be a lot of movement in the Asian session, unless we are dealing with Asian pairs. See that? So now, if we're dealing with the yen versus the dollar, it's gonna be different. You see, they're gonna be a lot of movement during the morning, which is gonna be in the Asian session, which is your AMs. That's when there's gonna be a lot of movement. See, and then in the
Yeah,
middle.
that was my next question actually.
Oh, okay, you get that now.
Yeah, continue.
So we are here on this point. So now, yeah,
So
the
only the
market is.
markets where it's American or British owned do you see a lot of liquidity. But when it's a pair with any Asian company, they could be also the same thing.
Yeah, yeah, it could be the same thing.
All right, all
Yeah,
right.
that's just yeah. You just have to shift it from, like, it works. This concept, you just have to shift it and tweak it here and there for it to work with something else that's different. You see that? So
But then
the
it's also
point,
noticeable when you read the graph. Yeah,
it's
when you read the graph, it's also is it also noticeable?
yeah. It's very much noticeable. Okay, we're gonna go into other charts. I'll show you. So like I was saying, let's say the market is opening, and so we have this instant where, okay, this is the open here. So once the open comes, let's say we're gonna have our low here. So we're gonna have our low here. So I'm gonna just show you a concept. Let's say this is our market. So okay, it just opened. Let's say it just opened. The price goes up a bit, comes down, and then it tanks one, and then it does a double two. So now we see this, you know, if there's an order block, it also helps, to start to
Yeah,
identify where the London can put their low and where the London can put their high. So once we see this, we see a two top. We see that the price is not going as low from the open, and then it happens that the market shoots up. See, so we're gonna know that the market will shoot up from this area as there's a lot of resistance as soon as it
yeah,
opens, and we see that it's making the low very close to where the open is. See, and then let's say it goes up and then comes back down a bit, and then from here it's created the high. Now it's
do you
created
ever
the
get a
high.
situation where it reaches the low, another low, before going back to the equilibrium?
Um, well, which is like, okay, if it creates a low, let's say earlier on, and then it comes to create a low like a bit later on. Is that what you're trying to say?
Yeah, it makes another low before going back to the equilibrium.
Um,
Like the
yeah,
two that you just showed me now. The second one just gets lower.
yeah. It can happen as well. It can happen as well, and then it gets a bit lower, and then it shoots. It can still happen. It can still happen, but as long as this low is close to the equilibrium, because the thing is trying to measure the distance between the low to the high. You see, if the equilibrium is closer to each one, this is where this concept lies. You see what I'm saying?
Yeah.
So then it can be that, okay, the New York is closing, is coming in here, See, New York is coming in here, and then New York comes in. Once the New York comes in, the market is here. Takes out that, goes take out the low. You see, and then
All right.
this will be our entry here. This will be our entry, and then we know that the biggest move is gonna be on the opposite because it's a small gap, but you can still quote it here as it to go and create the high during the London session. You get that. So then it goes to create the high. Once the New York opens, it's gonna take out the closest liquidity, take it out, and then shoot down. See that?
Yeah.
So I think there was also an example like that. Yeah, even this is an example of that. See, textbook, simple. The equilibrium was close to the buy side. You see that?
Yeah.
The equilibrium was mostly close to the buy side, and then there was a bigger gap going to the sell side. So what it did, divide, and then it went up, and then came down for the bigger movement. Got that?
Mm.
So let's just. Oh yeah, I'm trying to show you those other markets. Let's say GBP USD, for example. So I'm gonna mark the same things. Asian. This is Tuesday. Asian session starts. Soon as Asian session ends, Asian session ends. So the Asian session ends, what do we get? See, more volatility starts coming in. Now the price is
Yeah.
swinging. See that? The Asian, not the Asian, the London. The so New York. See, it's a lot of volatility in this market. And then New York
Yeah.
comes. Yeah, it's also minimum volatility, but it's more than the Asian. You see, still a lot of volatility. Was well, mostly it will get active during London sessions because it's led by the London, the pound. The pound is
Yeah.
yeah, is GBP versus USD. So the pound is the one leading this pair. So there will be more volatility during the London session. You see. So, but for this, you have to tweak it around a bit. So let's even see. Can check. Let's check something that has a separator in between USD JPY, USD JPY, or is the Japanese yen versus the US dollar. So the middle, the middle, uh, the middle market is London here, which is the divider. You see that? So let us just pick a random day. So it's the 8 of 7, 8, yeah, yesterday. So Wednesday, starting from 12, and you can see that there's some volatility happening here, unlike the other pairs, during the 8. So this is volatility here. See that
Mm.
there's a lot of volatility, and this is during the Asian session, which is the morning until 8:30. So even here, we actually had a major movements also during the London. So, yeah. Then Uh, yeah, so like you won. So in this instance, actually, the Americans were were
They were
not
actually
as
less volatile.
volatile. Yeah, yeah, were less volatile. So it does tend to happen sometimes. Does tend to happen. So, but you get the idea basically.
Yeah, and
Yeah.
so each timestamp, each interval for each market has a specific way to be read as well, right? Like it's not all the same. Like you wouldn't do what you do in the London market. You wouldn't do the same thing in the Asian market on a different, doesn't matter what company it is or what currency it is.
No, you can. You're gonna use the same idea and the same theory. You just have to, since you're changing from like USA, so you're gonna have to change the way you're gonna use your time frames. You see that?
Yeah.
So still the
So you
low
never
and
change
the
the time
highs.
frame.
No, 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 because you can if you want to, but it might end up being a little bit difficult because that's what I started
Yeah.
noticing with a lot of mentees that it becomes a little bit difficult switching zones. You know, you can
Okay.
100%. Yeah, you can. It's basically gonna be the same thing. You know, it's basically gonna
Yeah.
be the same thing. You know,
Right.
yeah,
No, but definitely the sniper strategy works, bro.
yeah. It's dangerous, bro. I won't lie to you. It's very dangerous. I want you to just okay, get in your just back test it on your demo for today for today's movement.
Yeah.
Just back test it
No,
on your demo.
I'll definitely give you feedback by the end of the day what's happening.
Yeah, yeah, yeah. Let's say we can get on a call later, and then I can also help you fund that account as well. We can go through the funding as well.
Okay, I'll wear sharp. Let's do that around 2.
Ooh, okay. Let me not promise two. Let's try and do it a little bit later on in the day because the New York has to take place. You see. So let's try and do it like around I don't know. It's 8:30. A bit tight.
8:30 tonight.
Yeah.
Nah, that's perfect.
All right, yeah, 8:30. I think 8:30 would just work out. Let's just see how the New York session goes.
Alright. I'll wear nah sharp dog.
Okay, now see you at 8 then, bro. Just yeah, back test it as well. Or you can even look at the previous prices just to practice it as well. That's how you back test basically. That's back testing. Just look at the
I'll wear,
previous
yeah, yeah, yeah.
events. Yeah, maybe take it back, even a year back. Even like 2 months back. Yeah, pick a specific day and just see what happens, see what happened. Try to deduce where the perfect entry was. You see that?
I'll wear.
Yeah, you can even do it for today's market on the US 100. Just do it, have it there on your chart structured, and perfect. Because yeah, I see we're gonna take a sell. We're gonna take a sell today.
I'll wear. Nah, definitely, bro. I'll keep sending you feedback every time I come across something.
All right, now perfect. No, that's perfect.
I'll wear.
Safe things. I'll send you this video now as well. Yeah.
I'll wear. Thanks, bro.
All right.